Hello traders, welcome to your quick financial market update. Let's dive into some of the latest movements in key markets. We've got a lot to cover, so let's get into it. Let's start with the US dollar. The dollar index has been on a bit of a wild ride. On Monday, it took a dip, briefly falling below 107, as concerns about artificial intelligence valuations and trade tensions with Colombia weighted on investor sentiment. Last week, the dollar posted its worst performance in over a year, mainly because investors are now expecting President Trump to impose smaller tariffs than initially feared. This sudden shift in expectations has led to a slight pullback after the dollar surged 10% since September. However, if the Federal Reserve keeps interest rates steady while other central banks like the ECB and the Bank of Canada cut theirs, the dollar might face some serious challenges ahead. For now, it's hanging below key resistance levels around 108. If it stays weak, we could see it fall further to 107 or even lower. Next up, oil prices. On Monday, we saw a sharp decline in crude oil, dropping to a 2-week low. This was driven by weak economic data from China and Germany and concerns about Trump's trade war heating up again. Trump's calls for OPEC to lower oil prices haven't gone unnoticed, especially with the ongoing war in Ukraine. Despite this pressure, OPEC is planning to boost oil production in April, which could bring more supply into the market. Technically, oil has been weakening, falling below $74 per barrel, and a further drop to $72 or even $70 could be on the horizon if the bearish momentum continues. Switching gears to gold. Despite gold's traditional appeal as a safe haven asset, it's been under pressure lately, falling to around $2,730 on Monday. The main culprit? A stronger US dollar, as Trump's tariff threats and the ongoing trade war took center stage. Gold might find support soon, though, as its downside seems limited with all the uncertainties surrounding Trump's next move. If gold manages to break through $2,750 and hold above it, it could start pushing towards $2,780 or even its all-time highs around $2,790. Turning to the Aussie dollar, we saw AUDUSD find some support at 0.627 as the US dollar softened a bit. However, things are a bit mixed with the Aussie dollar. Economic data from China, Australia's largest trading partner, came in weak, which is dragging down the Aussie's momentum. Expect some volatility as traders wait for upcoming inflation data with Australia, which could influence the Reserve Bank of Australia's next steps. For now, AUDUSD is hovering around 0.629, with resistance near 0.633 and support at 0.626. Finally, let's talk about the USDJPY pair. The Japanese yen has been benefiting from the safe haven rally as global risks rise, especially with renewed trade tensions. The yen gained after the Bank of Japan hiked rates, and now the USDJPY is hovering around 154 after dropping sharply. The outlook for the yen looks positive, with potential further appreciation if risk aversion keeps driving investors towards safe assets. If USDJPY continues its downward trend, we could see it fall to around 153 and even as low as 152. To wrap it all up, the dollar is facing some headwinds with ongoing trade concerns and technical resistance. Oil prices are under pressure due to weak global data and Trump's trade war. Gold is staying low but might find support if the dollar weakens further. The Aussie dollar is caught in a tough spot with mixed data from China and Australia. The yen is strengthening as investors seek safety in uncertain times. Thanks for tuning in. Stay tuned for more updates and remember to keep an eye on these key levels as they could dictate the next moves in these markets. Until next time.